If you look at Bank of America and Citi, they are slowly being broken up, and they will continue to be slowly broken up. The regulators will not do it, politicians will not do it, but the market will do it, because these big banks are not going to be able to have the returns that I think these smaller institutions can have. I definitely think these banks are too big. For one reason is that they're too big to run. Nobody can really run these banks efficiently. You look at Jamie Dimon, the best manager that we got, he didn't even know what they were trading over in London. That's the problem. They're too complex, too much of a black box.
What happens to banks as an investment if some of the additional proposals go through, whether it's raising ratios, raising capital even more? We see what's happening in Europe in terms of ring fencing. What happens in terms of the investment strategy if you hold these financial firms?
Well, of course, the higher the capital, the lower the return on capital, and that's why the banks are fighting it. I truly feel that none of these higher capital ratios are really going to make it through, because the banks will lobby very heavily against it and always bring up the fact that this is bad for the economy. And every time they bring that up, the regulators kind of panic a little bit. Listen, a lot of the stuff going on today is about not really dealing with the crisis of the housing industry. Why do we have QE3, QE4 down the road? Is they're afraid to let the housing find its natural bottom. And so therefore, there's all this government protection and subsidies. It's the same thing with the banks. The banks will always argue that if you do this, we're going to be uncompetitive and it's going to be bad for the economy, and then usually the regulators give in.